Everything you need to know about products and services that can improve your life. This is Experts on Call on CL 650.
We're back. This is Experts on Call on CL 650. I'm Joanne Sutton. Thanks for joining us today. And today we're actually talking about insurance, and in particular, earthquake insurance. Joining us in the studio from Intact Insurance is Patrick Magnuson, along with Andrew Dublotny of Laguerre Pelling Insurance and Bill Adams, Vice President of the Insurance Bureau of Canada for the Pacific and Western regions. Now, we're here to continue this discussion we're having about earthquake insurance, and we've covered a lot of information so far on how to be prepared and what might happen in the instance of an earthquake. And basically, unless we've lived under a rock, it's hard not to have seen the impact of quakes in other areas, like in the Haida Gwaii, California, Japan, most recently the damage in Nepal. But do we have any actual statistics about how many people in Canada, or in particular British Columbia, actually carry earthquake insurance?
I think we found that within Vancouver and the Lower Mainland, it's probably around 55 to 65% of people who have insurance have opted for the additional earthquake insurance coverage. It probably varies depending by region. Bill, you might have a bit more detail on that.
Yeah, Patrick. Across the province, it's in the 40-45% range, and it peaks as high as in the 70% range in parts of Vancouver Island.
Patrick and Andrew, are you surprised by those numbers?
No, not at all.
Really?
No, I see homeowners tend to have more coverage. The issue is condominium owners. They a lot of them feel because they have strata insurance that they don't have to worry about being protected, and it's their contents, and the earthquake coverage is on their condominium policy.
So let's just talk a little bit about, in general, how does earthquake insurance work? How does it apply?
Well, basically, your basic policy does not cover earthquake insurance. You have to buy an extension of coverage, basically an earthquake insurance endorsement, and that earthquake insurance endorsement covers the shake damage. So basically the damage caused by the earth movement. It also covers a few things like landslide. It does not cover tsunamis. It doesn't cover flood. But
simply if the earth is moving and your walls crumble in.
Sure, or if and it covers your building. It also covers your contents. So if things fall down, or if all your china breaks, or whatever the case, or your TV falls over, or your wall-mounted flat screen falls off the wall.
If the house fell on the car.
Yeah, well, the car is not going to be covered under your homeowner's policy, but certainly the house would be covered itself, and the dent from the car would be covered as well. But it, and things like the resultant damage, like say, for example, a fire, if a natural gas line breaks and then causes a fire, that's not covered under the earthquake insurance endorsement because fire is covered under your base policy. So there is, depending on what the situation was, and Bill alluded to, there's hundreds of thousands of different iterations and variations that may happen when the event occurs. But depending on how that all turns out, you may or may not have coverage if you don't have the insurance or the earthquake insurance.
And another area to look at is deductibles, because as Patrick's talking about with the fire, but some companies now are applying the earthquake deductible to the fire. So Intact's particular case, if you have $1,000 deductible and an earthquake causes a fire, you would pay $1,000. But there's other companies out there, not to mention the banks, but some of them will charge you the earthquake deductible on your house, which could be $60,000, $70,000, or $80,000 after the fire occurs.
So let's just start with the basics then. What does a homeowner need to know before they purchase earthquake insurance?
Well, what deductible are they prepared to live with? What percentage of the risk are they prepared to live with? The standard deductible now for, especially in Richmond, you're looking at 10% and higher, depending on the company. Some areas of the province you can get 5%. Some companies are still offering 5% in various parts of Vancouver out into the Fraser Valley. So you do have the option to. Most companies now provide you with the option to buy higher deductibles, so you can save some money by buying a higher deductible. You can choose to, some companies offer you the option to buy less coverage on your contents, so you can save some money that way. Or you can have no coverage at all. You can just say, I'm just prepared to, as long as my house is rebuilt, I'm not worried about my contents, because with the earthquake deductible, it's going to be so much higher that you may not even exceed that deductible on your contents.
So go ahead, Patrick.
Just to clarify the deductible, the deductible, we talk about it as a percentage, but that's a percentage of your amount of insurance. So if your home is insured for $600,000, that's the cost to rebuild your home with one of basically the exact same home in the exact same spot. It's $600,000. If you have a 10% deductible, that means your deductible is $60,000. It's not a percentage of the loss; it's a percentage of the home.
The value of the home.
That's right. So when we talk a little bit about earthquake preparedness, one of the things that you have to think about is, how am I going to manage that $60,000? What do I have in the bank, or how am I going to deal with that deductible? Because that's going to have to be paid before the earthquake insurance kicks in. Or as Andrew was saying, maybe there's a lower deductible option, but depending on where you are, it's going to be probably 5, 8, 10, or you may even have the option for 15%. And of course, then the cost of the coverage would also be.
There's actually a new product coming out on the market that allows you to actually buy earthquake deductible reduction. So you can actually buy down so if the company offers you 10%, you can actually buy down your earthquake deductible. So, and it's fairly reasonable cost, which goes back to the condominium issue.
I was actually going to ask you: is there a difference between owning a home and owning a condo?
Yeah, well, as a homeowner, if you've got equity in your house, the banks are probably going to be prepared to lend you some money to cover your earthquake deductible. So your deductible is high, but at least you've got something there of value. But as a condominium unit owner, you are responsible for, and I don't think a lot of people understand this, for the portion of the earthquake deductible on your building. And so you
not just on your suite, on the whole building.
No, well, you got your contents. That deductible is $5,000 or $6,000. That's
right.
No big deal. But if the building is damaged and you're living in an $80 million building, then there's a 10% deductible. The strata is going to have to come up with $8 million before the insurance company will stick a shovel in the dirt. Now, where is that $8 million going to come from? So it either comes through assessments, or if you have a condominium policy, then you have the option, at least with Intact, to buy up to $25,000 coverage for earthquake deductible. If you choose not to buy a policy, at least buy this new policy that's out there, so you can have $50,000 coverage for earthquake deductible for your assessment. Because
has this been specifically designed for an owner of a condominium?
Well, it was that in mind, but just it's available for commercial insurance or even residential. So some people aren't prepared. They don't have an option at this point in time. The insurance companies are trying to manage their risk so that the cost doesn't become so prohibitive that nobody can afford it. So they put deductibles on, which some people say, if you got $1 million house, you're looking at $100,000 deductible on your building, and then maybe another $80,000 on your contents. Well, that's a lot of money to have to come up with. So for $120, you can have you can reduce that deductible by $50,000.
Can we talk a bit about if you have an earthquake insurance policy that has a guaranteed replacement cost? How does that work?
Well, guaranteed replacement cost that's not so much the earthquake policy, that's within your base policy.
That's in the regular house policy.
Yeah,
okay.
And what that means is that, let's say you insure your house for $600,000, like we were talking about earlier. If when it comes time to rebuild that house, it actually ends up costing $800,000, well, we guarantee that we will replace that home on the same spot with like kind of quality, regardless of really what the cost is. So if that $600,000 home costs $800,000 to rebuild, we'll still rebuild it up to $800,000. We're not going to stop at $600,000.
Well, that's not quite true throughout the industry, though. We're seeing companies that are trying to manage their risk, again, trying to minimize the potential to have to increase their costs. Intact's not one that's done that at this point in time, but they're actually capping the amount that they're prepared to pay after an earthquake. So if you have a fire, they'll pay the $800,000. But on that $600,000 risk, a lot of companies, or not a lot, but there's companies that are now capping it at 1.2 times, or so they would only pay to a maximum of $720,000. And the reason they're doing this is because insurance companies, for the most part, buy reinsurance, which is insurance for the insurance companies. So they need to quantify their exposure and be able to tell their people that they're buying their insurance from how much their exposure actually is. So by putting a 1.2 times on, they know they can actually say this is how it is. So I always use the quote, how long is a piece of string? When people say, well, do I need more insurance? Well, same thing on the earthquake. I mean, is it 1.2 or we see statistically after these major events that the costs of reconstruction usually rises anywhere from 20 to 30%.
Certainly. That's expected. So if I don't have an earthquake insurance policy, and I have just discovered that, just saying, you know, I phone my broker, which is the first thing I should do, phone the broker, find out what do I have it, do I not have it. I now know that my regular house policy will not look after me in an earthquake. I know that the government's not going to look after me. So when I come to you, what are some of the questions that I should be asking? Is there something specific?
Well, yeah, again, it goes back to that comfort level on exposure. Or, you know, how much are you prepared to pay when it comes to the deductible? And you know, those are the options you got to choose from. So you've got options. Do I want just my contents or my building? You know, there's different options out there in the marketplace to look at. You know, the other thing that back to condominium unit owners, something that they need to look at is there's a portion of the policy called additional living expenses.
Okay.
And what that does is it covers you in the event that you have to live away from your present location in the event of a claim. So typically if you have a fire and the house is going to take 8 months to rebuild, they'll pay $2,000-3,000 a month to put you up somewhere else. Well, the thing that really blew my mind at this symposium is that they brought in a fellow from New Zealand to talk about reconstruction down there, and they're talking houses are going to be taking between 5 and 6 years to be completed. But get this, for commercial buildings, they're talking 10 to 15 years before those buildings are rebuilt. Well, can you afford to live out of your condominium for the next 10 to 15 years?
Where do you go?
Where do you go? And this is what really scares me as a broker, is that all these people are going to be displaced, and where are they going to live? And and a building doesn't have to fall down for it not to be habitable. If you're in a 40-story building and the elevator shaft is twisted so you can't move it, are you going to walk up and down the flight of stairs 40 floors for the rest, for the next 10 years? I don't think so.
I don't know. We're not trying to instill fear-mongering here, right? It's all about being educated. And insurance is all about being prepared for the unknown, what can happen.
But if you don't know, if you don't ask the questions, I always say you better to ask the question before the claim than afterwards, because you're going to come cap in hand and find out, oh, suddenly the government's not going to pay, the insurance company's not going to pay. What am I going to do?
Is there anything else you want to add, Patrick, as we move on to another topic?
Well, I think it's important for people to know what they're buying. So, I have to balance out the product and the coverage you have with the price that it costs. But we're looking at a 55 to 65% take-up rate. I think that means that there's 45 to 35% of people who don't have earthquake insurance coverage. That's a number that I think should be higher. That's not just me speaking as an insurance person. That's me speaking as a BC resident. It's
coming from your heart.
That's coming from my heart, yeah. You need to protect yourself, you need to protect your family.
That's right. That's what we've learned so far. You are listening to Experts on Call on CL 650. I'm Joanne Sutton, and joining us in the studio today are the insurance experts, Patrick Magnuson from Intact Insurance, Andrew Tablotny of Laguerre Pelling Insurance, and Bill Adams from the Insurance Bureau of Canada. If you have more questions about the topics we're covering today, please visit the website intact.ca, or we could go to your website, Andrew.
LaguerrePelling.com. So I've done a lot of research on this, and I've put a lot of links for government links, everything you need to do to have a proper kit, things you need to do for your car, are you in a wheelchair? There's things you need to know if you're in a wheelchair, what you need, things you could do to be proactive. So there's tons of links there and information for you to prepare yourself. So if you're starting from scratch, it's a great spot to go.
LaguerrePelling.com. We'll continue this discussion on earthquake preparedness and earthquake insurance on CL 650. We'll be right back.
This is Experts on Call on CL 650.